What's up, guys? It's September 19th, 2023, one day before FOMC. We had a pretty nice day, honestly. There's a lot of range. Each side got 30 points. We're going to start with yesterday's context, the market cycle, the first six bars, buyers and sellers, and the patterns that make us money. Yesterday's context, we had a range kind of like the opposite of today. Failed breakout, pushed to a new high, and then we sell off back to the open. We don't really sell off to the open, but we test this balance zone. And today, we get a more downtrendy range. Yesterday's range was about 20 points. Today was about 30 points. But here we see failed breakout by the bulls and sellers. So something a little bit interesting about today. Within the overall context, the market cycle, we'll get into it. This could technically be a failed breakout or a continuation. It really depends on what happens tomorrow. So yesterday we had a range, more bullish. Today we had another range with about the same, a little more 50-50 today. The market cycle, we are in a range. This is the 1 hour time frame. Range highs. The reason I'm not putting this as range highs is because I feel like this is a failed breakout. So it overstretched. The market overstretches before it returns. So this is the all-time high, but it looks like there's more price action around this level. And then here's what I was talking about, the 2-day continuation. We have a sell, a pullback, a gap down, and a sell. Oh, let me delete that. What's interesting is today, yes, was a pullback, but it kind of would resemble a failed breakout on a higher time frame. Maybe on a 4-hour chart. See? Does this look like a failed breakout now? Like a 2-bar reversal pattern? So that's interesting what we'll get. I think it's really important to be able to see other charts with one chart. So I'm reading the 1 hour chart, but up, down is 2 bars. And on the daily, I think this would be a doji. So it's really important to understand what bars look like on other time frames without looking at other time frames. See? Doji. I really didn't check before I did this to say that. It's important to just understand the multi-time frame analysis without actually going into other time frames. But back to the market cycle, we could either be in a downtrend or a range. It's hard to say because of this close, If this was a good downtrend, I don't think bulls would have made it all the way back to the breakout point. In ranges, gaps get closed. Not traditional gap downs, but like, for instance, this is a bear gap. This would be a bear gap because the bars, there's no bodies, bear bar to bear bar, maybe like that. And in ranges, gaps get closed. So, see right here how this is good price action. So, see how the bears kept this gap open, and then look, they got a gap down. And then a huge gap up. But what I'm trying to say is there was more selling pressure because they kept the sell orders here gap down. Whereas today, the gap is getting closed. The gap is getting closed. Here would be the gap starts, and then look, it doesn't even make sense to draw the box because it got closed. So maybe this was a failed breakout. 80% of breakouts fail within a range. Tomorrow's FOMC, so maybe the market's just going to kind of wait for a direction. Who knows? So that's where we are in the overall market cycle. The first 6 bars of the day were very telling. They help us act accordingly for the rest of the day. Not to say we're going to get a full-on downtrend, but look. Yesterday was a bear channel. You could say it started from this bar, the bear bar. A broad bear channel. And bears somewhat got a breakout. It's expanding, so maybe one could say this is bullish, but look at the price action. It's 2 huge bear bars closing on their low. So bears are in control of the first 30 minutes of the day. If you make a line right here, this is the open of the day, below bar 1. And then the first 6 bars will tell you where the 30-minute bar is at, if you're trying to learn how to read multiple time frame analysis. If you want to know where we're at on the 1 hour chart, and you have the open marked, if we're trading below the opening, then you could think, okay, the 1 hour chart is forming a bear bar, if that makes sense, because we're below the open. Or if we react around, if we dip, go like that, it's starting to form a doji. We dip and go like that, you know. So it's a little price action tip that helps me out a lot with just reading the 5 minute. This is a 5 minute time frame, by the way. So first 6 bars, a lot of selling pressure, a lot of wicks with a gap down. Gap down didn't really get continuation. That's not very good for the bears to have a bull body for the first bar after a gap down, but it tested the 50% level and it sold. Oof. Okay. I'm kind of eyeballing this. I have to fix my fibs. It's about the 50% level ish, and they sold. So, off the first 6 bars of the day, I would expect more downwards continuation. And if we're point counting, bears already made 10 points. Bulls are not making money below the EMA, so bears are going to go for another 5 points, and then they're going to go for the 10, creating a 20-point swing. This is how I point count: 10, 20, 30, and I look for continuation between 5 and 10s. So we went over the market cycle. We are either in a downtrend or range. I'm thinking more range because of FOMC. We went over yesterday's context. Yesterday's context was a range, kind of inverse of today. I didn't notice that till a minute ago. Went over the first 6 bars. We had more selling pressure and hardly any buying below the EMA, so bears want to sell with a gap down. Now let's talk about the buyers and sellers. More selling pressure with the gap down, even though the first bar of the day is bull bar. I think bulls got trapped, which helped this sell. Selling pressure is picking up, so the market is agreeing that we should move lower. And the bar, this last third bar right here, is very climactic, and it's natural to take profits. Look where the market bounced at the 20-point zone. The market knows to take profits at 10, 20, 30-point swings. That's what we got here, the first pullback. All pullbacks start with profit taking. We get the first bear flag, and we sell off into a weak bear channel. Second leg down, and a bear channel. This created a falling wedge too. So falling wedge is bullish. Leg 1, leg 2. I'm still looking at legs, but since I'm point counting, it's a little bit easier. Top of the pullback, leg 1, leg 2 is met. High probability trade, continuation down. We're below the EMA with a gap down. Bears have momentum. Bear flag, very good bear flag. A lot of wicks suggest selling pressure. And we look, bears make another 5 points and they go for another 5 points. This is a 10-point swing, just about. And then they go for another 10 points and they meet it. They meet the objective and they get a 30-point swing for the first half of the day. Here's the bear channel. Very weak. And then the falling wedge. One, 2, 3, and this is strong because we know we're at minor support and resistance because it's 5 swings and 10 points. So we know there's profit taking at each of these levels, and we can see it. Here's no profit taking. They just went for it. Profit taking. Profit taking at the 5 point. They swing down to the 10 point. Profit taking. This is a failed breakout with a huge candle. This is a good long to me. I was long around here. And then we get bull flags. Bull flag 1, 10 points. Bulls make 10 points easy. They go for another 10 points, and they make that. I caught each of these pulls, actually. I'll have the breakdowns of those in the shorts coming up. So this is 30 points with an exhaustion. Get out. Get out here. The market is showing you, look, I'm turning at 10 points, turning at 10 points, turning at 10 points. This is another pattern. An inside bar after exhaustion can be a reversal pattern, and bears got 10 points. So the market is range bound. This was the fair value, the opening. We tested lower, and found buyers and popped right back into the value price, the fair value price, the balance zone. The market moves between balance zones. Look, here's a balance zone. If we sell, I'm willing to bet there'll be some sort of like bounce, maybe a little pullback. Something will go on around this balance zone. Bears will come back for this because they most likely went short. Huge patterns. Today had huge patterns. Here's another. So, bull flag 1, bull flag 2. Third bull flag fails, but we get a bigger bull flag here. Double bottom. And a test back up to the 10 point, and that creates a double top, profit taking, scalp out, bear scalp 5 points. It was a profitable day for both sides, and that creates the buyers and sellers. I hope you guys learned something. Keep studying price action and use your stop loss. Hit the follow button for more price action tips and more breakdowns. I'm gonna be doing trade breakdowns, and I'm almost done reading Al Brooks' bar by bar. Reading price charts bar by bar book, and I'm going to be doing breakdowns of that. Hit the follow button if you learned something. Have a good day. Bye.